So unless you've been living under a rock for the last year, you might well have heard of the Chinese stock problem where all the stocks are crashing. Like many other fund managers, Cathie Wood, the famous investor who's in head of the investing fund ARK, sold all of her shares in Tencent and over 1 million shares in JD.com. This was at the end of July, where since April, Working Day Trader has been promoting and pushing and saying what a great opportunity it is to get into the Chinese market. Since April, when I did a video about potential and the pros of that, so I've been consistent since then of saying that the Chinese market is still great value, and I still think it's great value now. So we're going to go into who's right, who's wrong, if anybody, and let's have a dive in to see all the facts. So the Chinese government cracked down on a lot of the tech sector and other companies within China. They started to put regulations in on different companies. There was lots of different things going on. This caused obviously a lot of panic and a lot of fear with a lot of investors who were invested in a lot of the Chinese tech companies. A lot of big investment firms also got spooked and have sold. Cathie Wood being one of them. Obviously, like I said in the start, she sold all her 10-cent stock. She sold a massive portion of her JD.com stock, over 1 million shares. One of the reasons she's stating, obviously, because of all the Chinese crackdowns and what the government are doing at the moment, how she values the companies was a bit unclear to her and where the value was, so she decided to sell out on all those stocks. Where throughout this, I've had my Chinese stocks all year. I've obviously been in Alibaba, Tencent, JD.com, and a new stock called Key. And obviously my portfolio, as I've said in many other previous videos, have been down. The Chinese whole effect of re-sorting that out has pushed the stock market, has collapsed. Many stocks have been down like 40-50% throughout the year from their year highs. So obviously portfolios have taken a massive hit. Have I sold out my stocks? No, I haven't. I've kept hold of them because I still believe long-term future will sort itself out. And throughout this time I've been adding to my shares. Obviously there's been lots of comments. It's been very controversial, the whole Chinese thing. Lots and lots of people have all their opinions. But yeah, that happened. She sold out. Interestingly enough, though, within the last week, the ARK fund through Cathie Wood has recently bought lots of stock of JD.com. So after selling them a few weeks back, she's now bought back in again, probably because she's seen how low it's got, as it possibly now that she's happy that it's hit rock bottom. I think this is a possibility now that she sees signs of the Chinese market pretty much hitting rock bottom. So the downside now is very little, where the upside is massive. So I think it's not really Cathie Wood versus Working Day Trader. I think on this now we probably agree that the value is good, and she's invested back into JD.com, which is, I think, is a really interesting sign, and it also is a positive sign for the Chinese market. I think fairly soon this is beginning to, like say, also hit rock bottom. I think a lot of the stocks now are pretty much as low as they're going to get. They may well go lower, nobody knows. There could be more things around the corner. But they are pretty low now, and I think from here on they're going to go up. And I think she sees that as well. So I don't think it really is her opinion versus mine. Obviously, she's paid an awful lot of money and has got masses of experience, and she's a professional investor. So I'm never going to say she doesn't know what she's doing, but there we are. That's the situation for out of it. As Alibaba holds the biggest position in my portfolio at over 12%, and it's by far the biggest sort of company pretty much in China, I thought it's a big good company to use to look at what's really going on and what's caused this stock to fall. As you can see from February, when it's at its highs, it's now down over 50%. Let's have a look at the timeline to see what sort of things have been happening and why this has happened.
We started off with the Ant IPO, which is a company that's owned by Alibaba. That was halted for financial technological issues. The Chinese government were not happy with many factors, so they stopped the IPO. Then the company was fined $2.8 billion in dollars for unfair monopolistic practices, and rightly so. They were being a bit naughty by stopping a lot of their customers selling on other sites. And then Chinese brought in a lot of other regulations. They passed the Personal Information Protection Law. They've also brought in data rules so that the data must only be collected with user consent, and they have to store that and use that correctly. And recently they've been rocked by a sexual assault complaint by a manager within Alibaba. Alibaba took swift action and basically fired that manager. So they've reacted quite quickly to that. So there's been lots of different things happening which have caused the stock to plummet.
So all of these things added together has caused a lot of fear in the market. There's been a lot of stuff going on, and like I say, lots of fund managers selling out, and there just seems to be lots of fear and panic in the market. A lot of it is just without basis, really, I believe. And the whole price of why the price is so low and why it's crashed so much, it's just down to pure manipulation of all that's going on and the fear. And obviously, when people are just selling out because of the fear, and they read all the stuff on the media and they go on to all this stuff about China's going to ruin the West, etc. All this stuff going on and how they're going to crack down and just make all these companies in China non-profit is just manipulation, and it's just a lot of it is not even true. And it's just noise basically. And I think you just need to be sensible, block a lot of the noise out, and just look at the fundamentals. And that's what we should do. We should do now. We should look at the fundamentals. When we look at Alibaba as an example of the company we're looking at, and many other Chinese stocks are exactly the same, and you would do the same process. You look at the first one, which is the profit and loss sheet, and you can clearly see just from a quick glance that over the last few years, continually growing gross profit, continually growing net profit. Yes, this year they took a bit of a hit with the fine. Like the fine was 2.8 billion. That has affected their net profit, but only slightly. They're a massive company. The turnover is huge. It's dented their profits, but only slightly. They're still making a profit, and they're still growing year on year on year, which you want to see. Next year, they've paid the fine now, that's done. It will grow again. That is just what's going to happen. The customer base is massive. A lot of the fines that they've been put in place is not going to stop or shrink their customer base. So that's going to continue growing. You look at their cash power is still relatively healthy. Free cash flow has obviously been hit by the fine, but it's still good. Then you move on and you look at the balance sheet. The balance sheet again has been growing year after year after year. Their assets is just huge. They don't carry a lot of debt. It's just a massive monster of a machine. And then I thought it'd be really interesting to also look at more of the facts and the fundamentals of Alibaba, an example, against a really well-known other company like Amazon, who is a similar, in some aspects, type of company. I mean, Amazon is huge, obviously, and I'm not saying that they're not, but I just thought it'd be interesting to compare when you look at fundamentals of a company. Obviously, I'm invested in Amazon as well, and who wouldn't be? Again, Amazon's a monster of a company with great fundamentals. But let's just have a look. I mean, this is Alibaba sort of stacking up against Amazon. I'm not saying by any means that Alibaba's better than Amazon or etc. I just want to compare. You just need to compare the fundamentals against each other. And if you look at merchandising value, Alibaba was 1.2 trillion last year, compared to Amazon's 490 billion. Monthly users at Alibaba was 925 million. Compared to 209 million worldwide for Amazon. That's just simply because China has such a humongous population. It's just way, way bigger. We're talking probably quadruple bigger than the US alone. China has a huge, huge population. I have to say, I've done previous videos about how huge their population is, and their customer base is massive.
That's why they have so many users on their platform. Their total revenue was 119 billion for Alibaba, where it was 443 billion for Amazon. So obviously Amazon's making a lot more money. A lot of the stuff that Alibaba sells to their customers is probably lower value. Obviously, people that they're selling to also probably doesn't have as much money as the West as well. So these are the type of things you have to sort of count into that equation. But it's still decent, 119 billion. Their net profit margin, so the profit margin they make after, which is just pure profit, Alibaba 19.3% is just pure profit they're turning over, compared to Amazon 6.6%. So huge profits that Alibaba are making. The revenue growth for the next 5 years, if you go onto these sites like Yahoo Finance, etc. For the next 5 years, Alibaba is expected to grow 46.7%, compared to Amazon, which is going to grow roughly around 29.7% over the next 5 years. One thing I would say, to be conservative, being that there's people will argue, well, now all these restrictions have been put in place by the Chinese government, there's no way that Alibaba is going to grow at 46.7% for the next 5 years. And I think that you should take that into account. It is going to have some effect, of course it is, especially with now they can't not manipulate the market so much. But their customer base is massive, and a lot of the people that sell on their sites aren't just going to suddenly leave, because that's where the customers are in China, is on Alibaba's sites. So even if you have that to be really conservative, you're still looking at 23% revenue growth for the next 5 years, which is again fantastic, and that is being really conservative. And then you look at then at the end, the market cap of Alibaba is 436.6 billion, compared to Amazon's market cap, which is 1,654 billion. I mean, yes, Amazon probably deserves to have that market cap because Amazon is a humongous company, and it's a fantastic company. But the way I look at it is Alibaba that far behind Amazon as far as market cap? I don't believe so. And I think Alibaba is growing all the time. So that's when you look at the market cap and you look at the fundamentals of the company. To me, it looks bang way under its price, and I can definitely see it going back to $300. When no one can be sure. Obviously, the price at the moment, we've had a bit of an upturn over the last couple of days. So it's a good sign that things maybe could be bottoming out, but no one can guarantee that. It could go down again and something else could happen in the market which sends it down. But like I say, I still strongly believe in the fundamentals of these companies that I'm invested in. Alibaba is my biggest one, and the fundamentals are fantastic. I can definitely see that going back to $300 plus. When that will be, I don't know. Is it going to be by the end of the year? Possibly not. We shall see. It could be a longer process, but that company will definitely go back to $300 within 12, 18 months, possibly, is more realistic. So I'm happy to be sat because I'm a long-term investor. I've been adding to my positions in the Chinese market. I think it's a massive discount on sale, and that's where I see the money going. So thank you very much for watching. I hope this has sort of explained some of the situations that's been going on with the Chinese market. I'm still quite happy to hold my position within the Chinese market. Like I say, I've added some more. I see this as an opportunity why people are panicking and people are running for the hills. I see this as a perfect opportunity to get in and take advantage of this situation. I can see this changing within a year's time, and I can see myself being sat on some nice profits. So okay, remember, there's always risk when investing. This is not financial advice. There are huge risks, more risks with this Chinese market than any other market. The risks are very high, but this is the way I'm investing and this is how I feel comfortable. So just remember to take care of your own money and always do your own research. And I hope you've enjoyed this. See you soon.